Welcome to the Salty Investors episode number 10. That's some
Woo.
kind of milestone there, Tim.
Yep. How you doing?
How you? I'm all right. I'm all right. Been a weird sort of week, 10 days or so. But we'll get into that. Let's kick it off with your salt for the week.
Oh, you might have heard there's FTX has just collapsed. And
No, you're going to steal my salt. I know
I'll pop might be different.
it.
My salt is like, everyone's a complainer now, and we hate the free market. We need regulation.
Oh,
All this sort of stuff, and then all the people in the finance world come out of the woodwork and say, "Oh, look how bad this crypto stuff is. That should be
mm,
regulated to the hilt."
mm.
And these guys, in '08 and, multiple other times, love the Fed, love they've got a backstop there, a put, just to cover themselves, it goes bad. No wonder they love all this stuff. So they're not really free market people. That's my
No,
salt. Like,
they love a rigged bank. They love a rigged game.
yep. Take the profits,
Why
but none of the losses, thank you. And yeah,
socialize the losses? Yeah,
yeah. What are you
yeah.
salty about?
So FTX as well, but this is salt mixed with some Schadenfreude, which is that all of these geniuses, these people with lots of money sitting on capital, Sequoia,
Oh,
Tiger Fund, all these people, these unbelievable, while they're just generating returns, it's geniuses of the market, people, and we sit in on all the big deals. Our deal flow is amazing. We see everything, but you can't see a scam artist. That's what it. So there's a bit of Schadenfreude there, and there's a bit of just. I mean, this is every cycle.
yep.
Jim Chanos says the fraud cycle follows the financial cycle. So this is the time when you're going to see it. So it's not unexpected, but I still do just marvel at the legends of the business who just fall for
Oh.
this shit.
Yeah, well, it's some big names now. I'll speak to them later, but obviously,
Mm.
SoftBank and these
Yeah.
guys, Tiger. You expect these guys. No one thinks they've got credibility. So, um, that's not it. But there's some other, very big
Well, yeah.
Paul
To be
Tudor
honest,
Jones. Like there's like,
I didn't realize he was in there. I didn't know.
mm,
I mean, yeah, I think SoftBank is. Who's the guy that? I mean, I think they're ridiculous, to be honest.
oh yeah,
But so I don't. That's who I fully expected to see in there. SoftBank.
yeah, yeah, yeah. So, but like when you see these other serious people, like, um,
Mm.
that is very concerning. Like they've got brand names, and
Yeah.
they're not just B grade players. Well, I'll speak about them a bit later, but like some of them I actually follow and I've looked up to in the past, and then I went and looked at some of their portfolios and their venture capital funds, and you just like they've got Rivian and all this just junk, just total
Yeah.
freaking junk, um, and they're
Maybe
offloading
that's
it.
just it. It's that part of the cycle. You think these guys employ teams of analysts to go over and do due diligence, and at the end of the day, maybe at peak cycles they just sort of the money's so plentiful and they just spray it everywhere. And I'm not making excuses for them, but there's this pretense. There's always this pretense of, well, look, you can't beat the market. You're just sitting at
Yeah.
home and behind your screen. You should just invest in an index fund. Well, look what the geniuses are doing. That's what gives us hope
I've been
in
watching
some
those
ways.
LBO documentaries, from the '80s. I'm
Yeah,
getting a bit of a flashback towards that, that sort
yeah,
of period, where these people started to go into some crazy stuff, and debt was
yeah,
not a problem. And as you
yeah,
know, rising interest rates is exposing a few of these things a little bit.
yeah,
So,
yeah. Well, that's when it all kicked off. I mean, Jim Chanos, I brought him up before. If I remember his story rightly, he worked in a steel mill in the summer after he finished college in 1979,
okay.
and he got paid more than when he started on Wall Street in 1980. And that just goes to show you that the
Mm.
80s, that this because up to that point, Labor had done pretty well. It shared pretty well in the gains, and then the 80s kind of flipped it, and it all went to capital, and Wall Street became this. I mean, banking and business banking, and that was a boring job, right?
Yep.
Yeah.
No one to get into finance. Yeah.
Yeah. It wasn't that lucrative. Yeah. Yep. Certainly today, there is an argument. Maybe it should go back to being boring. Didn't Paul Volcker say the biggest innovation in finance in his lifetime was the ATM? I think that's what he said.
Well,
all the rest of it's sort of junk.
Well, people like even Charlie Munger, mentions things like, the greatest minds aren't going into solving cancer and stuff like that. They're trying to work out squiggles on a frickin' chart now. So yeah. I don't know if this is the best use of human capital, into a lot of these areas, and, but
yeah.
So some good can come out of this. It's going to take a little bit longer, I think. This is just the start, as you mentioned. So
this is going to be huge. There's going to be documentaries. Someone's going to make a drama series out of it on HBO. This is it's bigger than the WeWork thing. We'll get to that later. Let's get some of the boring stuff out of the way, and then we can get back to scam wankman freak later on. So let me just figure out how to work this. So as we know, last week in the US, inflation came off massively, Tim. It came from 8.1% year over year to 7.7%, and it sent the market screaming higher. The S&P was up 5.5%. NASDAQ was up over 7%. And I think that featured in like the top 20 moves since 1970 or something for the NASDAQ. And interesting, Barry Ritholtz said actually that in 25% of these cases, it was the start of the reversal of a trend. So keep that in mind. One in 4 times, it was a reversal of a trend. Anyway, what I've got up here, some comments from one of the RBA deputy governor, Michelle Bullock. So she's been out talking. I don't know why they do this. I reckon they should just shut up. Don't talk to anyone. Just surprise us, like a surprise party every month. Just, but anyway, she's basically been sort of talking it down, the hawkishness. She says we could scorch the earth and get inflation back down very quickly. Is that the right thing to do, or is it better to try and preserve some of the gains we bring back down? And then she was at Senate estimates, and she said there may be an opportunity to sit and wait and look a little bit, so that they're getting close to that point. So this sort of sent the bond market. If you remember when last time we showed this chart, they were at 4.2. Now they're at 3.75, call it. So that's coming down pretty rapidly. I mean, my view is the RBA might go one more time, but I don't know if they'll go much more than that. Seems, just what's coming out. Inflation is coming off in the US. That's not, it's not. I think that's pretty obvious. But I mean, my go-to bugbear, the thing that I keep rationalizing myself into a bearish stance is earnings. That's the final leg of the stool that hasn't come undone, because, I mean, maybe we did have a bottom at S&P 3,500 or whatever it was, but I'm still open to the idea that we've got to reckon with the damage done. And so I brought this up. This is from US. Who's this from? Morgan Stanley. Yeah, Morgan Stanley. So they're a long way off from the rest of the market. They're down to $195 for next year's earnings, 2023. They're 16% below consensus. So consensus is around, call it 230, right? So if Morgan Stanley's right, and you place a 20 multiple on 195, you're still short of 4,000, right? Yep. Now, of course, at what point does the market look through that and then start looking to 2024? And so this doesn't mean that the market will stay below 4,000 all of next year.
Yes.
It's quite unlikely to, but I think that still has to. I think they will be closer to the ultimate number than the consensus is, and the consensus will come to them. So they say there that we see S&P 500 discounting 23 earnings risk sometime in Q1 23 via a 3,000 or 3,300 price trough.
Wow.
It's pretty bearish, I
Yep.
suppose, but not unexpected, not out of the realm of possibility, particularly given where we started valuations at the top of the cycle. And I think the big sort of thing, I mean, if you could tell me what Fed funds would be in December of 2023, like if let's say they're at 4 now, and let's say they're going to go to 4.5, 4.75, I don't know. Let's say it's going to be 4 at December 2023. I mean, it's tough to have more than a 20 multiple on that, isn't it? With a recession, an earnings recession. Forget about an economic one, but just an
Yes.
earnings recession.
Yeah.
Yeah.
Seems expensive,
Yeah.
Todd Combs, I don't know if you know who he is, but he's the lieutenant of Warren Buffett.
Yeah.
He went and had a bit of a disclosure on what he does. When he speaks to Warren, like no one knows this stuff. Like Warren never really, what does he actually look at? And yeah, they're just looking at moats and things like that. But they're trying to think, how sure they are this price is going to hold up. What sort of confidence level have they got? The same question that you're asking here. And he goes to a 90% confidence level. Buffett does. So obviously, a lot more conservative nowadays. But yeah, I don't know. What do you think? I think they will cut by then, by December next year, the Fed.
Yeah, I think that's likely. I mean, I'm trying to.
What number?
I guess I'm trying. Yeah, like because I mean, they're going to go higher the next one because they've basically said so. And I mean, this incoming data might have some, but I mean, I expect them. This is just a gut feel. They're going to go 50 next one, and maybe then they'll sit. I don't know, but I think you could be right. It depends how quickly stuff comes down. Depends how. What's weird about this is because of that massive buildup on balance sheets of households in the United States, and the fact that they don't have the same kind of mortgage stress that we have.
Yes,
the consumers are in relatively good shape. I expect them to have a pretty good Christmas, and whilst sort of the corporate sector is running into trouble, the consumer seems pretty good. So I mean, actually, my view on a soft landing, I think there's a higher probability of that than expected, because what worries me is that this is the most anticipated recession in history. Everybody thinks there's going to be one. And usually the consensus of economists is wrong. So, it could well be that the economists completely underestimated the rise and stickiness of inflation, and then will completely underestimate how quickly it rolls off, because they have a recency bias. So I don't know. I think this is really tough to call either way.
Yep.
Yeah. So that's So I guess this is my rationalization for not having gone in fully with boots and all.
Well, you still got some hope here. So have I. Like I haven't gone boots and all yet. So like the VIX is at 25. I checked yesterday. Like just nothing happening really. A lot of sideways action really. I don't know. Something could big happen here. Like we know we got a fright the last couple of days. Poland.
Yeah.
That's the sort of thing that will cause this to happen. Something really serious to happen here. So you just don't know. I don't know. It's not the environment. Like we should get a correction. Because rising interest rates should do something. But if the Fed quickly jumps on it and corrects down lower, I don't know. We might get that soft landing that they always talk about. So.
Yeah, it's possible. It's possible. Okay, so this is basically third quarter highlights that you've picked out, yeah?
Yeah.
Third quarter earnings season highlights.
For anybody who doesn't really understand 13Fs, it's just you got $100 million in capital invested with other people's money. You've got a send some info to the SEC, 13Fs.
Yeah.
You know, a lot of people, these are the people that I like. So,
Yep.
you know, it's a bit biased. I just like quality. So you can
Oh,
see,
you've got a love-hate relationship with Ackman going on there. I see
I,
you've got him up there still.
yeah, like, he's still a smart guy, you know, it's just, you know,
Yeah.
just changes a lot, that's all. And, you know, you can see
Well,
most Tabrai is up there as well. So, like,
he's changed into a geopolitical analyst, as far as I can tell. Bill Ackman,
oh,
with his
yeah.
tweets, doesn't shut up about the Ukraine war.
Yeah, and he gave Sam Bankman-Friedman a, you know, oh, it's all right, mate, you know, like, sort of said,
It's all right.
you know, like, yeah, he understood, oh, you know, we all make mistakes or some junk like this. He quickly deleted that tweet.
Yeah.
So, I don't know, Ackman seems to be losing the plot a little bit here, but you see, Norbert Lou, you know, steady, increased Smith and Wesson.
Yeah.
Disclosure, I followed him into this as well.
Yep.
Very nasty stock to own for political
Mm.
reasons in the US, but the
Yep.
numbers are insanely good.
Yep.
Yeah, and Ackman, you know, he's still going into this railway thing. It's just a classic Buffett play, you know, from
Yep.
just following that. I want to do this as well, because it's the same play as the US, just done in Canada, but just the horrible allocators. And see, the good thing when Buffett purchased it, he could just strip everything and don't let him allocate
Yep.
into stupid stuff. Like, you've got Buffett running your capital, like, so.
Yeah.
Yeah, I don't know. Can Bill do magic there? I don't know. Dan Loeb, boy, I've got some words about this guy. Like, he's one of the Sam Bankman-Friedman guys, you know. And I don't know if you know Dan. Like, he's very well respected.
Yeah.
Like,
Yeah. Yeah. I've read
extremely
his
well.
stuff for a long time.
Very well respected person. And I just went and checked up his venture fund, you know, and it's just got a whole heap of junk in it. But like, just total junk. You're thinking, you know, SoftBank type stuff, you know. And but
Right.
in Third Point, you know, he's still doing some half decent stuff. You know, he's in Colgate here,
Yep.
which is clearly consumer defensive.
Yeah.
Seth Carman, you know, and they, you know him from
Yep.
yeah. So Warner Brothers Discovery, you know, which was, you know, it's a great stock. It's just, you know, loaded with a heap of debt here. So if you're right and the Fed does pivot here or halts, they'll be able to keep paying down this debt. And in 3 years, it's going to be a gem. Like,
Yeah.
they own HBO and a whole heap of stuff. And I hope, you know, they give up the streaming thing and they just sell to Netflix, you know, go like an asset light model. They just license their programs to Netflix and it'll just be like print money. Like,
Yeah.
and Iron Source, I don't know, you remember from one of the first 2 episodes, this is one of the ones that I mentioned that was, it got bought out by Unity. So that everybody did well on that except for me, because I put my limit order in too low. And he's got out of Intel, which is a bit weird.
Right.
Yeah, which is a big value, where the big value guys have been, as you see, Seth. But he's sort of given up on it. Guy Spear, the nicest guy in finance, I think he is. Sold Twitter. I don't know if you've met Guy Spear before, but yeah, super nice guy. AKO Capital, that's the, you know, the oil guys in Norway, I think it is. You know, quality guys. Yeah, they're just adding, you know, to the big names that have dropped.
Yeah.
You know, these guys are following me into Netflix now. You know, you've got Thomas Russo, you know, which obviously I love him. You know, he's a great guy. But he's given up on Alibaba, you know, let that drop all the way down.
Shit.
So yeah, he's lost a bit on that. And it's climbing back up now because, you know, US and China are all chummy friends again, and COVID zero is all coming good. So I don't know. It's looking pretty good, the China story now, you know, risk adjusted.
Yeah. Yeah.
Not financial advice, but I'm just saying it's looking a lot better than it has in a long time. And Terry Smith just has gone nuts. He's gone, you know, gone to Apple finally, Otis. which is the elevator guys.
Didn't he own Apple before?
No, just
I wonder why.
well, there's a heap of
Seems like something he would own.
yeah. Um, just he couldn't really see it, like because he was like me. He got caught in this thing called BlackBerry and Nokia, and which burnt us very hard. Like we've been through this story before, and we're seeing the high flyers of in this technology crowd come in and take over and say they've got platforms and ecosystems,
Yeah.
and so he's seen this story play over, and he's never got into Apple, but you should see the return on invested capital from the last quarter, and Apple is like 60% or something, and then it's 30 before that, and just insane numbers. Like it is just, yeah. But he sold out a Wingstop, which just had this huge turnaround, which is like a chicken wing restaurant in the US.
Yep.
Might sound weird, but just a franchise model like Domino's. Very low cost, but high returns on invested capital. But it peaked up again. So now I've got pricing to see when he exits positions. So
Right.
my back testing is I've actually got a few numbers now. We're going to see because I can see how he gets into positions, but how do you get out of these things? Like,
right.
Yeah, it's
I think that's even harder.
yeah. Multiple times harder. Monish has got into this thing called Brookfield Asset Management. It's just just asset managers. Just I don't know why so many people are into this thing, but
I know it's very popular now. In Australia, LICs, listed investment companies, big deal. Yeah.
but they're so complicated. How do people understand these things? Like I know a little bit about finance, but these things are like super complex. Like as soon as you look at the book and you're just going, how do they generate stuff? Like you'd have to, like I don't know.
But I mean, have a look at a Macquarie Bank annual report. I mean, so this is a true story. I was an assistant banking analyst. We had a new banking analyst come in. We didn't cover Macquarie Bank because it's a bit of a different thing. We covered the majors, right? ANZ, CBA, Westpac, and NAB. And I think maybe we were, because we're still building up, and I think we're going to cover Suncorp. But anyway, he goes, "Oh, look, let's sit down and model Macquarie Bank." So I come into his office. We have the annual reports, and we open it up. Like, there's nothing to model really, because it's a black box. Like you don't know what their M&A is going to be. You don't know what their trading profits are going to be. How do you model something like that? It's almost impossible. I mean, seriously, analysts would just take, okay, what did Macquarie Bank do last year?
Yeah.
Add 15%. Add 10 or 15%.
And the market's going to slow down a little bit, so we expect M&As to slow down by this, and that's how you model it. But how much risk are they taking on, and all this sort of stuff, and what department's going to blow up? It's just I just look at it and I just can't understand why so many people are into it. But just too hard for me. And then we've got Warren, which is buying into Ficken Assemi in Taiwan. The numbers are great on it. Like I've always been it's hard for me not to buy it, but the China crisis seems to be over, because Warren's given it the seal of the tick of approval here. So China's not going to invade Taiwan now. So, so I don't know. I think semis, if we do get a crash, they're the ones that get hit hard, like tech. So I don't know. And there's heaps of pipeline coming on.
Down, haven't they? They've been beaten down. There was the chip shortage and all that sort of stuff.
There's oversupply now, right?
Okay.
I don't know. The numbers look good, but we're on the turning point. So I don't know. I don't think it's a great move, but Warren's shamed me not once but twice. More than a handful of times he's shamed me before. So I can't really speak against the fella. But this Louisiana Pacific thing, it's like a house. They build planking on the side of housing. And it's a great product. something that I can understand. We just need the Fed to hold back on those interest rates a little bit, to keep the economy ticking along and keep housing and real estate ticking along. And the numbers are just astronomical. I think the price to free cash flow is under 5 or something. It's just insane. And the return on invested capital is through the roof. So for me, it's like, wow, like if we do get this soft landing, this is one that I should have owned. Like,
right.
like it's just insane. So I'll put in an Otis limit order here, a bit too greedy, but see what happens. And I just purchased this morning some cryptocurrency just to upset everybody. So
see, the contrarian in me thinks. See, I'm actually surprised because as you said earlier, everything crypto is getting pasted based. Oh, it's all a scam. It needs to be regulated. Blah blah blah. I'm surprised Bitcoin is where it is.
Yes.
I would have thought it would get sold off down to 10,000 or something, but it hasn't. It's what is it now? 16, 17, somewhere around there. I'm surprised that it's held up that much, to be honest. But anyway, so
I went to an exchange. So like FTX has gone under. So you've got Coinbase, and there's Crypto.com, and basically they're the same brush has been tarred with these guys. That it's all a Ponzi scheme. Hypothecating all the everything. It's all. There's no actually underlying assets here. So
Coinbase is regulated, though, isn't it, in the United States? It is actually.
Yes.
To some extent. Yeah.
Yeah, but it's still, it's unsure how they're going.
In the dark. Yeah.
Yeah, they've got USDC, which is their stable coin, which is they're part of the Circle group. But so we don't know what regulation will come through, but they're going to get hit hard with that. I bought a token that runs on crypto.com. So it's been hit down about 95%.
Wow.
So if it does survive, like it does come back, like wow. Like if you want 10x returns, you've got to take, it's a little bit of risk here somewhere along the line. And I think they are getting, the guy could be a scammer as well, like, these other guys. But I think, risk adjusted, it's worth a punt compared to what else am I having a go at the moment. So,
I mean, my problem is, like, I have a contrarian bent which says, well, if this is completely on the nose and everything gets sold off, that there's probably a trade there to go long. My problem again with crypto is that I have no idea what it's worth. Just none. I just can't put a price on it, so I don't know if it falls. I just don't. I can't. I mean, with a stock, I know. Okay, if Microsoft gets to 200, that's a screaming buy, or But I just have no. Is Bitcoin a good buy at 15 or 1500? I don't know.
I don't. You remember episode 1 or 2? I said it'll crash down to 15, and that'll be the bottom. But it hasn't even crashed to that. I'm like, it crashed to 14.5, but it recovered within
very briefly.
Within hours, it was jumping back above that. So somebody here is buying, and somebody with some pockets, like somebody's got some money here, and they're allocating. So I don't know if it's held up by Tether. You've heard the Tether story, how they just printing USD and buying.
Yeah.
But it seems we can have these huge rundowns. If you could just print money, like why'd you let it go down from 69,000 to 16,000? Surely you'd want it to be going the other way if you could just print money. Like, so, it doesn't work. Something along here is, half legitimate. I'm not saying it's 100% legitimate, but there is some legitimacy to the space. So I treat Bitcoin as a bearer asset. So it's a bit different to everybody else. So I treat it as like a hedge, not a straight inflation hedge, but a hedge against, I want to be able to trade with people no matter what.
Okay, so it's not a hedge because, it was being touted as sort of the new gold, but In fact, it's
Well,
it was
gold,
so well correlated with the stock market, like that if the stock market was down heavy, then Bitcoin would be down heavy, and so it didn't seem to act like a hedge. But that's not what you're saying. It's a hedge. It's a different type of hedge.
yeah. Well, I think that as well. It's just it's going to take time to get there because it's untrusted, you know, hedge at this moment against a market collapse or inflation hedge, whatever you want to call it, and people don't trust it. Not like gold, which has been around for thousands of years, so it's a lot trusted. But even that, what's happened with gold over the last couple of years?
Hasn't had a good year this year.
No, so you can't say, oh yeah, look, something's been around for a few thousand years, that protects you in inflation, doesn't it? Well, no.
Someone did put out a chart yesterday, I forget who it was, on Twitter, and they said, who said cash wasn't king? Because it was the only thing that was up this year.
Yeah, I know. Yeah. So, all these narratives, that everyone's got. So it's good to be a little bit humble about the crypto space. Obviously, I'm a believer in it, but I don't believe in all this junk that goes on. Like, I don't even believe in 99.9% of the coins. Like, so, that.
Yeah. But I mean, that was obvious. I mean, we'll get onto this when we get to SBF, but that was obvious when celebrities were coming out and they had coins named after them and stuff. I mean, it was just so 1999. I mean, I'm old enough to remember, but that's what it felt like. It was just ridiculous, like celebrities and things, and obviously, Tom Brady with the flamethrower. I mean, these are classic sort of, I mean, to be fair, a few years ago when Musk came out with his flamethrower, I thought, come on, this has got to be the top now. But see, the thing is, I had said this publicly 4 years ago, so that to me Tesla was sort of the poster child of excess in the market. But that's because I completely missed the whole crypto Dogecoin bullshit. I wasn't paying attention to that. That was way worse than Tesla. Tesla's still bad.